Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. The markets are closed today. It's Memorial Day. Happy Memorial Day, everybody. Now, why am I here? Well, I miss you guys. I wanted to have a little chat with you before the markets open tomorrow. Now, what has happened in the past week? In the past week, we've had that rally. Now, I talked about that. That's a short squeeze. The shorts have to cover because they got a little rally mode going. All right, we were up about 6% last year. Now that brought the S&P, I guess it's only down, what, about, 15%. The Dow's down probably only 10%. This is not the big crash. This is not the big crash I'm waiting for. That's going to happen later. Now, how far later? That's, well, your guess would be probably as good as mine. But believe me, when the crash happens, you're going to know about it. It's going to happen very quickly, very violently, very rapid. This was kind of just a basic decline, nothing really serious. I mean, we barely hit bear market territory. We didn't hit bear market on the Dow and the S&P. Technically, midday, the S&P hit bear market territory, but the NASDAQ and the Russell, they went into bear market territory, but they're already bouncing back, and they're bouncing back really strong. Now, this coming week, we got a short trading week, only 4 days because we're off today, right? So that before the 3-day weekend, we typically have an up day. It's typically an up day before the 3-day weekend. Now, after the 3-day weekend, it's typically a down day. So tomorrow, I'm expecting a little bit of a pullback. Sure, we may bounce in the morning, and that might be a chance to take some profits off if we get a bounce. But I'm expecting a little bit of a pullback, a little bit of a consolidation. Now, why am I expecting that? Well, we've had the rally up, right? But now on Friday, we gapped up. We gapped up higher, okay? And we had a big run on Friday. But I expect it to consolidate and to come back and to fill that gap. Now, I'll be a buyer there. I've still got some long positions on, but I will be adding to them there. I do think that we're going to move higher. Look, we're at the end of the trading month, the end of May, right? So we're entering into June. Now, at the end of June, I expect this market to be higher. Why? Well, because it's the end of the quarter. Now, the end of the quarter is how performance is rated with hedge funds and mutual funds, and they don't want these bad numbers. We've had a big decline in this 3 months that we're going into the third month now. So they will make this market rally back up. I believe that. I believe we'll be higher at the end of June. Now, do we have a crash coming? Absolutely, we got a crash coming. It's just not yet. Now, another thing I look at is the VIX. You'll notice that the VIX has come down and sitting right on the 50-day moving average now. Now, typically that's support now, and that should bounce up higher. When the VIX bounces up higher, that means the market will come in a little bit. Now, is it possible we just go straight up from here? Yes, and some of those are the strongest rallies, and the strongest rallies are these bear market rallies. They're short covering rallies. It is possible we continue to go straight up, but I am expecting a pullback into a consolidation mode. That's just my prediction. Okay, so let's move on. Let's talk about the real estate market now. Now, what I find fascinating in this, you see, we are still at, historically very low inventory, and we are at the peak selling season right now. May and June, peak selling season. Okay, so why are the sellers reducing the prices? Okay, according to Redfin, 15% of prices are being reduced right now, meaning if you listed your house, 15% of those have already had a price reduction, or as us real estate people like to say, a price improvement. The price has gotten better. But look at, why is that happening? Look at strongest time of the year, low inventory, but yet we're getting these price reductions. Well, because they're not affordable. But this should be a sign for you. This should be a sign to just wait this out. I mean, the downturn is just starting. This is not the end. This is just the start, and this is going to take time to play out. Now, I do think it's going to happen relatively quick. Now, why do I think that? Well, the 2008 run-up before the crash, that took 4 years. It was very strong for 4 years and moved up. This time we've moved up in just 2 years. We had 20%, 20%. We're up 40% in just 2 years. That's a very rapid pace. choice. Now, when you move up that quickly, the downshift can move also just as quick. So be cautious here. That's what I'm saying. I'm saying be cautious. Would I be a buyer here? Not if you don't have to. And a lot of people have to. You know, they have families that are moving, they're relocating. They have to buy, and I understand that. You need a principal residence, right? All right, well, that's possible. But if you don't have to, sit back and just relax. I mean, this thing's changing. It's changing at a quick pace, right? I mean, look at, okay, so new home sales, they dropped 30% year over year. That's volume. That's not prices. But when you get the drop in volume, you're soon going to get the drop in prices because they're still building. They're still coming onto the market. And it's a race to the market right now. They want to get there ahead of the other competition. Lennar wants to get theirs on before Toll Brothers gets theirs on so that they can sell them, so that they can get out of the homes that they've built. But they're going to have to reduce the prices because there's an affordability issue. Now look at the affordability issues caused by these mortgages. The mortgages were at 3% and now we're right around 5.5, but we're headed towards 6, right? Because the Fed's claims they're going to raise rates again. I believe they'll get one more rate increase in, and maybe even 2. We'll see. We'll see how that plays out. But if they do, we could push up to 7 or 8% by August, September. My opinion is that September is going to be, well, September through December, there's really going to be a lot of turmoil, a lot of violence in the move downward in those months. And I think that, well, you know, if you can hold off and buy next year, that's an ideal situation. But even starting in September, I think you're going to have a better deal than right now. This is the peak selling season right now. I get that, but it's coming down. It's coming down. You want to wait as long as you can. But mortgages. So when you go from 3% to 5.5%, well, your mortgage rate just, I mean, that's 42% increase is what happened with mortgages. Now, what happened with prices? So you got the mortgage side going up 42%, but you also got the home values have increased 20% year over year, right? So you're 20% higher with 42% more. This is not, look at, this is not the time to buy. Everybody, I know, this isn't happening in your area, and I get that. Your area's still going up, and that's perfectly fine. But this is a problem. Look at, this cannot continue. Did your wages go up 42%? Maybe they did. If they did, then, well, that's great. But most people's did not. Most people did not. There's a definite affordability factor going on in the housing market right now. Look at the average income in the United States. I don't know the exact number. Let's call it between 50 and 60,000. Maybe that's average. Maybe that's even high. But look at, those people cannot afford to buy a house because they don't make enough. And they really don't make enough with the jump in interest rates going from 3% to 6%. They do not make enough. There is an affordability problem. But there's other things that are a problem with houses now. Okay, homeowners insurance. Wow, I got a friend. He just got canceled by his homeowners insurance. He lives up in the hills, kind of where the fires might happen, right? So anyways, he cannot get homeowners insurance. He's worried. He doesn't know what to do. He's trying other companies, but no one will give him any homeowners insurance. He's praying no fire comes, but he's thinking about getting out right now because he can't get homeowners insurance. I have another client like that up in the hills. That's why they are getting out. They haven't been canceled. Their homeowners insurance is still in place, but they're worried about fires coming. There's a lot of fires in California, especially up in the hills this summer. Oh, it could get real ugly real fast. But homeowners insurance has become a problem. In a lot of states, property taxes are just going up. Why? Because, well, the price of your house went up. And property taxes go up when the price goes up. Now, if you were in Boise, Idaho, I mean, look at, before the pandemic, it was like $200,000. Now your house is worth $800,000. Wow! I guess you're going to have a big property tax bill. Okay, and there's a lot of places like that. I'm not picking on Boise. I like Boise, but Boise's already starting to come down, though. It's come down 10, 20% from the highs. It's starting to reverse. Things are starting to change. But the affordability factor in houses is really getting scary. New homes, People cannot afford them. Existing homes, people want to get out. Inventory is coming on the market really fast. I just want you to know that things are changing. Things are changing rapidly. And I think they're going to continue to change rapidly into the end of the year. And I do think that the opportunities are coming. They're coming. It's, this time next year, I keep telling you, we're going to be talking about the glut of properties on the market. You're going to be able to get a great deal if you hold off. If you can hold off another year, I really think that it's going to be bargains out there. Now, I keep talking about 50% off in the market. Now, people tell me, Mike, that's crazy. Well, not in your area. I know that. I get that. That could never happen in your area. But think about it. That's really only going back a couple years. Look we've had a 20% increase, a 23% increase. That's 43%. Could we go back to the pandemic levels, the pre-pandemic? I think we could. But you see, here's the thing. I think we're going back a lot farther than that. I don't think the 2008 crash ever really played itself out to fruition. They didn't let it crash. They pumped in money. They pumped in $3.6 trillion into the market in 2009 just to make it go up, just to inflate the bubble bigger. So I actually think we're going back to those prices. And that's scary for a lot of people to talk about. And I don't think it's going to happen in your area, but it could happen in a lot of areas. So be careful out there. The market's back open tomorrow, and I'm very excited about that. This week, we could continue that 6% rally, but I'm more betting a little bit of a consolidation this week, a little bit of pullback, and that's a time where I will be a buyer. I'm Tall Mike. Get out there. Have a great Memorial Day, everybody. If you like the rant, give me the thumbs up. Why not? It's Memorial Day. Happy Memorial Day, everybody. Bye-bye now.